What's up, everyone? I want to talk to you about the QDTE swing trade I'm in, and core compounding it, or using those profits for other things. I want to talk about the SVOL position me and a bunch of guys in the membership group are in, and then individual stock versus market ETFs. Let's get into it. This is Mike, the tactical stock scalper. All right. Hopefully the cicadas are not too loud for you here, but here we go. So QDTE, I've been talking about this since it came out, essentially. And what an overpowered trading mechanism QDT is. Because of the weekly dividends and the way it moves with share price appreciation, makes it a darn near fail-safe trade. And I'll get into it. So me and guys in the membership group, I post this in the membership group. I'll leave a link in the description if you want to join. I put in there when I was buying it, and then we went through this correction the last, what would you say, 3 weeks or so, 4 weeks? So maybe a month, whatever. So as QDTE and the markets were coming down, we in the membership group were buying at levels using EMAs and waiting for a signal. We wait for a level, we buy. It break through that level, we buy. Then we got it to hold, and then the market started coming back up. Now, why QDTE is so powerful for swing trading is the dividends you get every week. So it doesn't have to get above our share price for us to be in profits, right? Because of all the dividends we get every week. Now, as of Thursday, QDTE is above my share price and other members. It's above our share price. So not only now are we making share price appreciation, we've also made all the dividends for the last month or two we've held it, however long we've held it, right? This was a swing trade idea and has now come to fruition. So what are we doing with this? Well, I can't speak for everyone, but I am, you could core compound it. One thing you could do, sell above your cost basis so you can get profit. You don't sell your whole position. You just sell the money that you think you need, that you're up. So, for instance, I sold 35% of my QDTE position today. I'll get the dividends tomorrow, in addition to the share price appreciation I made. And the dividends for the last month, how long I've held it. That's all profit. That's all free money. Now, you could do a couple things. You could core compound it, leave it in cash, wait for another market dip and wait for it to get below your cost basis, and then use that profit, right? And then get your average price lower and redo the cycle all over again. But what I'm doing is something I think a little more effective, is instead of waiting for this dip, like could be tomorrow, who knows, right? But I'm putting it into my free position. SQY is my free position. So I just put it in there. And then whenever I get the dividend from SQY, they're all free. Then I can use that money to core compound into QDTE whenever I'm ready. So I got 65% of my position left in QDTE, sold 35% today, put that profit from that 35% of QDTE from the dividends and the share price appreciation on 35% into SQY, building free dividends, baby. That's great. Okay. SVOL. This swing trade, me and the guys in the membership group got in, is just killing it. It's way up on share price. So you know what that means, baby. The dividends are free. It's above share price. So when we get paid from SVOL later this month, unless the market takes another major crap, we are way up on dividends. And I mean, it's going to have, the VIX is going to have to spike incredibly hard to get to where SVOL. We bought it on the day the VIX spiked. Guys, phenomenal. So now SVOL is way above our share price. Plus, we're going to be getting all the dividends from that. So much free money right now in the market through swing trading opportunities and buying low at levels on the chart. Now, I want to talk about individual ETFs versus market ETFs, okay? So what am I talking about? I'm talking about individual ETFs like Nvidia, Coney, Misty, AMZ, what you got it, right? All of those. Versus market ones like QDTE, QQQY, FEPI, etc. Right? So I do like a mix of both. When I first started and the market ones were coming out, I thought I was only going to be market exclusive and not get really into the individual ETFs from YieldMax. But some of these will really rip hard. And the market ones just will not, the market typically won't rise to the percentage that an individual ETF can rise to. So for me, it made sense to have some of both. So I can get the big rippers from like AMZ, what else am I in? Phoebe, Nvidia, SQY, etc. Right? When these guys rip and they go up high, you know, depending on how earnings are, etc. When they rip, we can get really good profits from that. Not only from the dividends from holding it, but from share price appreciation. If you average down like myself, you know. So not everyone averages down, but yeah, I do. So I can get the cheaper prices, more shares, and then when it goes up, ladies and gentlemen, it's all free money. It's profit. But some people hate profits. So I don't know what to tell you. But anyway, that's what we do. So that's why I like the market ETFs, because they give you that opportunity for a really big ripper that the market ETFs won't give you. Now, I hold both, and I'm going to hold both, and depending upon our plan, I could morph back into all, you know, market-related things, like only QDTE, IWMY, whatever, things like that, right? I could morph back into those. But right now, I think having a mix, I got 7 high-yield ETFs. 4 of them are stock-related, 3 of them, I believe, are market-related. So, you know, it just depends what you want. That market-related ones give me a balance. Give me an even keel. Lets me buy the dip with confidence because I know the market will come back up, particularly since we're in this massive bull run. Until major levels get broken, I'm buying the dip every single time. And that, for the last year, has proven to be an amazing strategy. As a matter of fact, that strategy with my growth account has proven to be an amazing strategy for over 10 years. So I'm not going to change my dip buying strategy with the high yield ETFs. I'm going to continue to do it. Same thing with the companies I believe in with YieldMax. That means AMZ, that means MSFO, that means Nvidia, things like that. Phoebe, SQY, you know, these type of guys. These are companies that I personally believe in and that I think have a great future. So yeah, I dip by those. And so far, my friends, so good. Hope you enjoy the content. This is Mike, the Tactical Stock Scalper, out.